Forward on the weekly here, finally gotten some volume the past month or so, but really not a whole lot of movement in here. You are getting the high and lows in here of almost $1 for these past 4 weeks or so. Going forward, support is going to be the 956. Your resistance is going to be up here about 1053. So really a dollar channel in here is what we're looking at, but we are below this 9-day EMA right here, 978, albeit we are only about 6 cents below it. So we closed at 972, but we are below the 9-day EMA at 978 here, run away from our 200 SMA. You can see it's all the way up here at the $13 mark. These two have to revert back to each other. So if that means that consolidating down here between the 9.5s, 10.5s for a while for this to come back, or if all of a sudden we're going to make a run up here to this 1150 area again, like we did back in November, October, where that was a good place of consolidation for us. If we end up running back in there again, then obviously the 200 SMA will come down and meet us in here. RSI in here is basically neutral right now, about 43. Your IV rank in here is relatively high compared to itself, around 48. In here, you have 35-cent expected move by this Friday, following Friday, 48. If you go out to your April expiration cycle, 46-cent expected move, and you do have earnings coming up April 23rd. So maybe as we get closer to earnings, we could climb back above this 10.5 and then sit in this channel again. You can see from December all the way back until August, that is, we sat in this channel in here for about 4 months or so. So it looks like we're going to climb back in here and then hold. That would also give us almost a inverse head and shoulders here. So you got like your shoulder right here. Here's going to be your head, make another shoulder, and then we can kind of climb back up. And then if we do consolidate in here with that confirmed head and shoulders here on the weekly, then we're going back up in here to your $13 area, which is going to be your trend line up here. That is also kind of the area that we hit back in July. So that would confirm all of that, but it's going to be a while before we get there. The next few weeks, we're going to see what happens if we can climb back back above the 9-day EMA and hold, and then work our way to the 10.5s. But all in all, premiums in here relatively juice compared to itself, but really, again, not a whole lot that you want to play in here. If you go all the way out until your June expiration, it looks like your deltas in here are not really kind of far away that you want them. All your strike prices are about 17 cents apart, 785. You got 902s, 967s, and 985s in here. So really, it's you don't really want to play anything in here. But if you are trying to sell one of those 30 Delta Strangles in here, they are currently priced in, let's see, right around, it is going to be trading right around 61 cents. So really not even worth it in here for your premiums unless you have stock against this. If you have stock against this, then you can go ahead and try to suck out some volatility if you can on that $1 expected move by that June monthly expiration. But all in all, nothing really to worry about in here unless you have stock in here to go with it. All right, guys, if you like this video, make sure to check us out on all of our social media. We also have a Discord service if you're interested, and you can find all of our socials in the description below.